Hello there, world. Welcome back to my channel. If you're new here, I'm Joe, a licensed certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Today, we're talking about a question I get all the time. We just got married. How do our taxes work now? Or maybe you've been married for a while and still aren't 100% sure how it all fits together. Don't worry, this is totally normal. So in this video, I'm going to break down how taxes work for married couples in plain English. No confusing tax codes, just stuff you actually need to know. Don't forget to hit that subscribe button and check back for more videos. And be sure to check out our blog site where we post every Monday, Wednesday, and Friday. So what changes when you get married? When you get married, your tax situation changes, but not always in a bad way. In fact, you might even save money. What's the main change? You now have two ways to file your tax returns: married filing jointly or married filing separate. Most couples file jointly because it usually gives you a bigger standard deduction and a better tax bracket. Here's a quick fact. In 2024, the standard deduction for a couple filing jointly is around $29,200. That's double what a couple filing separate get. Let's break down what these two options mean between married filing jointly and married filing separately. So let's talk about what does married filing jointly mean. Married filing jointly means that you and your spouse are filing one tax return together. You combine your income and your deductions. It usually results in a lower overall tax bill. Now, what about married filing separately? This just means that you and your spouse are each filing your own tax returns. It means less access to tax credits and deductions and usually leads to a higher total taxes. So, why would anyone file separate? It might make more sense if one spouse has a lot of medical bills, student loan payments based on income, or legal concerns. But for most couples, joint is the better option. When filing jointly, the IRS looks at your combined income to figure out your tax bracket. But here's the thing: getting married won't automatically bump you into a higher tax bracket. That's a myth. Let's say, for example, you made $50,000 and your spouse makes $40,000. Together combined, that's $90,000. That amount gets taxed in chunks. Some of that 90,000 will be taxed at 10%. Another portion of your 90,000 will be taxed at 12%, and then the final portion of that 90,000 will be taxed at 22%. Not all at once. This is what we call in the United States a progressive tax system. So don't stress. Combining your income doesn't mean you'll lose more in taxes. In many cases, you'll save. What you need to file. Let's take a look at a checklist of items needed by you and your spouse in order to file your tax return. If you're filing jointly for the first time, here's what you'll need: both of you and your spouse's W 2s or 1099s, any other income info such as side hustles, unemployment, investments, banking info if you're getting a refund, deductions or credits like student loan interest, childcare, and so on. Now, if you're married filing separate, you'll still need some of your spouse's information, but you'll only need the basics like their name, their occupation, address, and their social security number. You won't need any of the other information spoke about for those filing jointly. Here are a few perks married couple can take advantage of when filing jointly: a bigger standard deduction, child tax credit if you have kids, earned income tax credit depending on your income level, education credits like the American Opportunity or the Lifetime Learning Credit, spousal IRA contributions if one of you don't work. These adds up, so make sure you check which ones you qualify for. There are a couple things we have to watch out for if you decide to file jointly. When filing jointly, you have to remember you both are responsible for the tax return. If there's a mistake or unpaid taxes, both of you are on the hook, even if only one person earned the income. If only one of you has debt like student loan or unpaid taxes, your refund could get taken. In that case, you can look into something called injured spouse relief to protect your part of the refund. Talk about finances openly. Marriage is a team, and taxes are part of that. Here are some tax tips to remember for married couples. Update your W 4 at work. After you get married, you may want to adjust how much taxes is taken out of your paycheck. Fellas, this is for you. Most often, I find in my tax practice with married couples is that it's usually the males who don't update their W 4 to reflect their new tax status. This usually ends up where the males have a tax debt, lowering the couple's refund or enhancing the tax liability owed. Talk about taxes together. Even if one spouse usually handles the money stuff, it's important you both are aware of how taxes work and what you're signing. Remember, if you're filing jointly, you both are responsible for the tax return regardless, so make sure you're talking about it. Keep good records. Combine financial documents like income, expenses, and receipts, and be organized. Last, name changes. If one of you change your last name, make sure to update it with the Social Security Administration before filing. I often find in my tax practice with the ladies that this will cause a rejected tax return because the last name is either hyphenated or the change is not reflected at all. So make sure you make those changes so that your taxes aren't delayed. Alrighty, let's recap. Marriage gives you the choice to file jointly or separately. Most couples benefit from filing jointly. Your income is taxed together, but it's not a punishment. You get access to more deductions and credits, and you both share responsibility for the tax return. Taxes as a married couple can be a little different, but they don't have to be scary. With a little teamwork, you've got this. If you found this video helpful, give it a thumbs up. And if you're married or about to be, drop a comment below with what's one money question you still have. I'd love to help out in a future video. I'll see you guys next week when we break down side hustle tax implications. Don't forget to hit that subscribe button and check back on our YouTube channel for more videos. And don't forget to check our blog site where we post every Monday, Wednesday, and Friday.